By the conclusion of calendar year 2024, I find it impossible to believe that we won't have hit 100,000. 2, 3, maybe 200 or 300K is where I believe this cycle takes us. You never know, maybe we're a little overbought at that moment, and we retrace a bit before we recover. No one has, as far as I can tell. In my opinion, we have only just begun, and it will multiply by 10 times and then by 10 times again. If you're an investor, you don't want to miss out on something that could increase in value by 100% and maybe even 1,000% if you look out 15 or 20 years. Bitcoin is the most valuable cryptocurrency in the world, and popular investment manager and proponent of ethical financial practices Lepard has a very bullish forecast for the price of Bitcoin. Larry, as he is more often known, concurs with Michael Saylor that the price of a single Bitcoin coin will soon reach an astounding $8 million. However, he is of the belief that the enormous gains will persist until the price of Bitcoin is at least 1,000 times more than its current value. Larry believes in Bitcoin because, along with other sound money proponents, he sees the debt-based financial system collapsing soon. Additionally, there are other significant fundamentals that make Bitcoin unique. Blockchain technology's network effect particularly captivates Larry. According to him, the use case for Bitcoin is its worth as a store of value, similar to gold, but it's far greater than that because to the increasing network effect. It is a once-in-a-millennium chance, and its value will increase as the network is adopted. Impressive indeed. A more unequal chance has never before crossed my path. It will be deeply regretted by those who fail to attend. It is the soundest form of money ever developed, full stop, Larry said in response to a gold bug who questioned Bitcoins. Use case is a means of exchange and store of value. With money, the safest option is always the best. Its characteristics as a store of value are superior. It will reach prices you can't even begin to fathom due to the network effect and Metcalfe's law. Larry revealed his extreme optimism for Bitcoin's future value and the reasons behind his conviction in the leading cryptocurrency in a recent interview with Jamie Curry of the Crypto Nutshell channel. In the venture capital industry, the most important thing to keep an eye out for is what Gene Kleiner referred to as dogs eating food. He didn't tell me this, but he did tell other people who he wrote about it. In other words, you should try to find something that already has a large user base and is seeing daily growth in that demographic. I understand. Seek out trends of growth that are readily apparent. Furthermore, if a clear upward tendency is apparent, one can extrapolate the data to conclude that, everything else being equal, the trend will likely continue. Our investment of around $5 million resulted in a $15 million value for Netcom, one of my major internet sector wins. Somewhere over $280 million was the price that AOL paid to acquire my company. As a matter of fact, we made $100 million. Totally bonkers. At the time we were involved with Netcom, it was a dial-up service based in Silicon Valley, and its founder had worked out of his garage. His server, which was linked to a larger server, which in turn communicated with the internet, and he had individuals logging into it. $20 a month was what he was charging. He had like 500 subscribers when I filed him, but he was adding 150 more every month. I forget the exact figures. There was an increase of 150. It was really mind-blowing. By the time he was through, he had amassed 200,000 subscribers, which is really phenomenal development. Well, it seems like something is making an impact. Also, you're noticing the same trend with Bitcoin, aren't you? Adoption, growth, users, and exchange-traded funds ETFs for bringing all that are merely immense. Listen, I wanted to fill you in on a couple that somehow slipped my mind. Consequently, Amazon and Google emerge. After deciding to launch my own fund, my initial move was to seek out affordable growth opportunities. My filing was done in India. The cell phone providers we were working with were experiencing 40% annual growth and were trading at 3 times their earnings. Yeah, that was effective. I understand. While I was in the US, I noticed that both Amazon and Google were expanding, but that neither of them was profitable. This was especially true of Amazon. Yeah, it's expanding, but they're boosting revenues while making up and losing money in volume. This is how I used to look at it when I was a finance major. And it was all thanks to ZERP that they were able to pull it off. I understand. To rephrase, the cost of capital was extremely cheap. Basically, middle and mainstream class American retailers were wiped out by Jeff Bezos due to his zero cost of capital. It was astonishing that he could predict our future without incurring any cost of capital. So he went around purchasing, paying a ton of money for warehouses and warehouse picks. Furthermore, he was losing money. What I failed to notice is that he was implementing the time-honored monopolist strategy -I.E., continuously incurring losses until achieving monopoly status, and after that you can charge more and earn a fortune. Therefore, I failed to notice that he was engaging in that particular game. Therefore, I believe that was an incorrect tactic. That is why I refrained from putting money into it. Also, I wish it had been the same with Google. They weren't relying so heavily on free cash. The part about Google that baffled me was that even though I use it, I've never clicked on any of the advertising. It occurred to me though, how does this work? Seriously, I just don't get it. These folks in advertising are being tricked. Even though they're shelling out a ton of cash to Google for ad positions, it's clearly not paying off. They were both kinds of network businesses that grew in value as more people joined, but I was mistaken about that, so I couldn't see it. I intend to avoid making the same error twice. After doing some research, I came to the conclusion that Bitcoin was a decentralized digital currency that was expanding at an exponential rate, and that money is essential for everyone, and that this particular kind of money is the most reliable. There is no deflection in it. As Saylor and Preston have recently stated, there are precisely 21 million of them, and that's all. From my perspective, it seems like such a blatantly obvious choice. And you mentioned price forecasts. No idea what tomorrow brings, and I certainly don't know what the end of the year brings either. I'm estimating 100,000, but I'm sure this will reach 200,000 and then a million in 2 million and 8 million per coin. That's the next logical step when a network expands, which is why I'm bringing it up. Because of that, I am pouting at the table. Those who do it often feel like they're paying too much. My incredibly rich friend knows that my typical cost is modest and that you just cannot afford to spend 60 or 70 grand. Come look, I exclaimed. To hell with it. I paid, I don't remember exactly how much. So on average, it's likely in the thousands. I mean, Max Kaiser was shelling out $2, and I really don't hold that man responsible. Someday, when someone is paying $2 million a coin, what I consider to be my average cost will appear ridiculously cheap. Thus, it's simply Saylor's point. I mean, Laura, it will keep going up indefinitely. I mean, you're going to purchase it in the end, so we can just go with that option. It's certain that everyone will buy this, but nobody seems to care. You might as well get it now instead of paying a lot more later, because no one or very few seems to understand that Bitcoin is a bizarre beast and that predicting its price moves from day to day, week to month, or even seconds to a few seconds is nearly impossible. I just dollar cost average and hodl, I don't sell, so you know. I've been following for a long time. The ETFs are a huge step in the right direction. They are, in fact. They make a large sum of money available for use of the asset. You know, I mean, the assets were down to 60 or somewhere in the high 50s to 60s even today. Well, it's still up like 40% year to date or something. Well, it's not like anything terrible has happened. I mean, this was 31 a year ago and 16 the year before that. You know, it's still doing its thing and it will keep doing its thing. As a result, I don't put much stock in the short-term fluctuations. When asked why the price is now what it is, I honestly have no idea. That kind of stuff doesn't really pique my interest. The MT, Gox coins could be one of them. I suppose it seems to me that there have been numerous short-selling hedge funds as well. Their faces are going to be ripped off, in my opinion. The halving happened not long ago, maybe a few months ago, according to one explanation that was offered to me. I believe this makes some sense. What about the miners? Their pay was halved. Additionally, some of them may be experiencing cash flow problems or poor profits at the moment, and some of them may have Bitcoin on their balance sheets. I imagine that the miners are in a predicament where the marginal ones are selling their coins to keep the lights on, expecting for a price increase that hasn't materialized yet. Additionally, we saw a